Good morning to all. The webinar is about to start. Please hang in there while all attendees connect. Thank you. Good morning again. My name is Cesar Iliano and I'm the Content Director for BNamericas. I'd like to welcome everybody to this webinar in which we will analyze the Capex forecast for the main mining companies with interests in Latin America. Our regional mining editor, Laura Superno, will start the session showing some charts that summarize the main findings of our Mining Capex Report 2021. We will then hold a discussion with Felipe Marquez Robledo, Senior Vice President for Colombia and Argentina at AngloGold Ashanti, Francisco Acuña, Senior Consultant at CRU, and Julio Iturriaga, Director for Mining and Metals for Latin America at Turner Townsend. I would like to remind all participants that they are in listen-only mode. Questions can be submitted at any time using the chat function on the right side of the screen. Depending on time, we will endeavor to answer your questions at the end of the discussion panel. So enjoy this panel, and first we'll go with the figures. Laura, it's all yours.
Thank you very much, Cesar. Good morning to everyone. The figures in the presentation that I will show today are based on our Mining Capex 2021 report, as Cesar mentioned. Each year, we study a sample of mining companies that have presence in Latin America. We focus on the global majors that have producing assets in the region, including also the two biggest lithium producers. And also, we include a number of smaller, regionally focused players. And the idea is to track their executed capital expenditure for the prior year and guidance for the current year, to try to get a sense of where the industry is headed in terms of spending and growth. So what we are seeing for 2021 is that spending is really set, or planned at least, to come back very strong after a year of contraction. The group of 29 mining companies that are included in our analysis has provided guidance that adds up to a 25% increase in capital expenditure this year versus what this group of companies spent last year. And we'll see that list in just a minute of which companies are included in the analysis. These companies' combined capex in 2020 fell by 7%. And while 7% might not seem like a huge drop considering the huge challenges that the industry faced last year, it really speaks to a lost opportunity because, as I'll show you in a few minutes, the intention before the COVID-19 pandemic took over was to continue this trend in capex growth that you can see in the chart, and that had been building over the previous 3 or 4 years. And that was really a hard-won achievement for the industry after several years of weak prices, caution, a lot of belt tightening, and a lot of hard work on efficiency. So maybe it's not surprising to see such a robust increase, or at least those plans for a really robust increase in spending for 2021. There are certain factors that will support this increase also, despite the new waves of the pandemic that have really been impacting a lot of Latin America over the last few months and now still. One is that these companies in general have learned to operate in pandemic mode. They showed in 2020 that activity could continue almost as normal, of course, and very importantly, while taking the necessary precautions. I do, however, want to insert a little caution here because Vale, the Brazilian miner, reported its first quarter results yesterday and said that its works schedule for Q1 was affected by COVID-related restrictions, but it wasn't enough to change their spending guidance or their project timelines. So clearly, while miners have learned to operate in pandemic conditions, that risk of the pandemic itself is not completely gone yet. A second factor that we see in favor of Capex success this year is that the fear of a liquidity crisis that really gripped markets at the onset of the pandemic is not present anymore. Metal prices are very strong now, as everyone here is surely aware, and there is not that intense certainty that led a lot of mining companies to cut their spending plans, especially in the first half of 2020. So the outlook is really that the mining industry will be successful in executing a solid increase in capital spending in 2021. This slide shows the names and the spending detail of all of the 29 companies included in this analysis, situated on the graph in order of their 2021 guidance. It starts, as you can see, with the 5 major global diversified resource companies, all of which do have producing assets in Latin America and by far lead the chart in terms of their global Capex guidance. These are the biggest mining companies in the world. And these 5 are followed by Codelco and Freeport, both copper focused, then Barrick and Newmont, the 2 biggest gold mining companies, and 10th place really is a tie between Teck and Antofagasta in terms of their spending guidance for this year. Here we have in a little clearer detail the top 6 operators in the sample according to this year's guidance, each of which is planning to spend more than $3 billion this year. You can see that most are planning a significant increase in spending for this year. The exception is BHP, where capital guidance for the fiscal year 2021 is a little bit lower, about 4% than fiscal year 2020. One reason is that BHP did complete its Spence expansion in Chile last year, so that's one less growth project that's going on. The companies that will pump the most cash into Latin America this year are going to be Anglo American, which is looking to spend between $1.3 and $1.6 billion at Quellaveco alone, the project in Peru, Vale, which has several projects ongoing in Brazil, and Codelco, all of whose operating mines and construction projects, of course, are in Chile. The other 3 on this chart all do have assets across Latin America, as I mentioned, but do have less growth spending planned in the region for this year. Here again are the 29 names included in the research, ordered according to the percent change between their planned Capex for this year and their actual spending last year. The average individual increase is 36%, so fairly significant, especially compared to the average change in real spending in 2020 versus the year before among this group, which was -5%. And we'll talk about that in a couple minutes. The biggest planned individual increase in spending in 2021, as you can see, is Equinox Gold, which also had an increase of 73% last year. And that is mostly because the company merged with another gold company, Lee Gold, at the start of 2020. So we're seeing basically 2 kind of mid-sized gold companies coming together and their Capex coming together as well. Southern Copper is targeting a big increase in 2021, 136%, which has a lot to do with projects like Tia Maria that aren't approved yet. That company was only able to execute about half of its planned spending last year. And Gold Fields looking also to double spending this year. Most of the company's expansionary spending in 2021 will be going to the Salares Norte project in Chile. And the company is also looking at an optimization project in Peru for this year. First Quantum, Codelco, Fresnillo, Pan American, each planning to increase Capex more than 50%. And you can see there are a number of other healthy increases planned among the operators. The two companies that show significant reductions for this year are Minsur, which is because they're finishing up construction at Mina Justa, and South 32, which basically is because they've divested their African coal business, so less sustaining spending there. And more details of each of these companies' specific spending plans for this year will be available in the full mining CapEx report that we will be publishing toward the end of this week. So just to take a look at the differences between what's going on with the industrial mineral producers versus the precious metal focused producers. The producers of industrial minerals did fall slightly harder last year. The ones included in our research registered a combined 8% drop in spending versus 5% among the precious metal companies. The rebound is looking similarly proportioned, with precious metal companies as a group looking to expand their CapEx by 35% versus the industrial metal or mineral producers at 23%. And the sample includes 20 industrial mineral focused producers, and then the other 9 are the precious metal companies. So the overall proportion of sustaining capital versus expansionary capital spending plans will stay similar this year to last year, with about 55 or 56% of overall spending dedicated to staying in business and 43 to 44% dedicated to expansion. But the average company increase in in their plans for growth spending was a growth spending increase among this set of companies. The average is 66%, which is a lot higher than the average increase in the guidance for sustaining CapEx, which is 39%. And this is basically explained by some very large percent increases in growth spending at some of the smaller operators, Goldfields and Yamana at more than 200% each, Pan American Silver and Equinox more than 160%, but also at some of the large operators, Vale, Newmont, and Teck are each looking to at least double their growth CapEx item this year. And of the 29 companies in our analysis, we include here data for 20 of them regarding their pre-COVID guidance. And that is because these are the 20 operators that we had been covering in our CapEx analyses the past few years. This year, we added 9 additional operators to the sample, and these are not included in this evaluation of last year's guidance execution. So before the coronavirus pandemic took hold, this group of 20 companies in total was planning to increase CapEx by 10% last year, and their actual spending fell by almost 8%, and that put it about 17% lower than their guidance, their original guidance. The companies reviewed and modified CapEx guidance in many cases during 2020, some earlier in the year than others, and that black bar there shows the guidance that was current toward the end of the year. And this is the missed opportunity that I was talking about at the beginning. Instead of that solid growth, continuing that growth trend, the companies ended up with a downturn in spending. So lastly, this is the detail of the pre-pandemic guidance. The companies that recorded the greatest disparities between what they had planned to spend in 2020 or hoped to spend initially before COVID and their actual spending were Southern Copper, Codelco, and Fresnillo, which each managed to spend less than 70% of what they had hoped, followed by Freeport, First Quantum, Glencore, Buenaventura, and Anglo American, each with less than 80% execution of their original guidance. So to conclude, We think the numbers here show spending in general definitely contracted in 2020, and that the mining industry will be working to turn this around in 2021 and return to a path of increasing capital expenditure now that we can see more market certainty and that the pandemic crisis has cooled or normalized a little bit enough to allow projects to be executed, to allow work to be ongoing. So with that, I would like to invite our panelists to turn on microphones and cameras so that we can launch our discussion. Good morning, everyone.
Morning.
Good morning.
Julio, Francisco, and Felipe. Thank you very much for joining us. We're looking forward to hearing all of your thoughts on this Capex and other topics. So to begin, I wanted to start by considering the obstacles that were generated and have been generated by the pandemic in combination with what are now very strong metal prices, and also how these combine with other in-country challenges, a lot of factors going on. So to start kind of generally considering all those factors, what is each of your view on the investment climate for mining in Latin America in the short term? I don't know if anyone would like to begin in particular.
Okay, Lara, let me start. Of course, as you mentioned, there is a lot of investment, and before the pandemic, it was very clear that was an issue with supply and demand. There were some delays in project and investments in the region, actually globally. So there was a structural deficit before COVID. Also, when you read the information about exploration, recent years were not very intensive in that kind of investments. Also, it's important to understand that, especially when you are talking about expansion project and stay in business project, you will see that it's low grades in those investments. And again, if we talk about decarbonization, net zero, and all the information that you find globally about investments in renewables, that is pushing very strongly in copper and nickel. So that means that power generation, transmission, batteries, storage in general, and electromobility are really pushing for this additional or super cycle investment in commodities. Obstacles in Latin America, I think that we have serious issues about political issues. Peru is going through an election in June. In Chile, we have these issues about the constitution that is starting in the next couple of months. And also, all the information that is more ESG related, more requirements about environmental, social, and governance. So all of these, in Chile, and let me go to the specific because I'm working in Chile, new constitution, there is some discussions about royalties. This is something that could be an important obstacles for these investments, but I honestly think that it's looking very promising nevertheless. So that's a vision that in my case is really Peru and Chile.
Laura, I would like to follow on what Julio was saying and maybe just try to highlight two things. One during the beginnings of the pandemic, and the second one when the pandemic was understood a little bit better. So at the beginnings, most of the companies were trying to protect the cash, and the most important thing was that protecting cash. You could see that was one of the reasons why many projects were either slowed or maybe stopped temporarily. When the companies understood how the pandemic was working and many of the jurisdictions allowed mining to continue working, what you saw was the difficulty on moving people one way to the other, and that made all the implementation of the Capex, especially the staying in business capital, was difficult to implement. So that's like one point. Now the other one is what's going to happen in the future, or at least what do I see it's going to happen in the future. It's that in Latin America, the countries are going to start fighting among them to attract those investments, saying the future investments, not the ones that are already planned.
Right.
And here is where regulation is going to be very important. I see that mining is going to play a super card on reactivation of the different economies in Latin America. And the countries that play that card the better are going to attract that capital for exploration and for implementation as well. Even for putting in business capital to expand actual mines or to extend the life of mines.
Well, and last but not least, I think, well, Julio and Felipe, I think they covered most of the key aspects of the changes we've seen in terms of Capex investment and attract capital to the region. I just want to give a bit of go back to one of the things you were mentioning, Laura, about the growth trend that we have seen from 2017 in terms of capital investment and maybe how that shifts. So South America has been obviously a mining destination or a destination for capital in mining for the last years, and obviously the trend usually follows the commodity prices. So as commodity prices fell up to 2015 and 16, all of Capex expenditures decreased, and we started to see an increase, and then COVID-19 basically hit. Just to give an overall understanding, obviously every country is different, every commodity is different, but South America in general in the last decade attracted for around 46% of the Capex worldwide for copper, 18% for gold, 32% for iron ore, with huge importance in Brazil. Lithium also is relevant with 18%, and then lead zinc, which are many mines in Peru, around 21%. So just to give that some context, so I think South America is being relevant in terms of different jurisdictions and different commodities. So obviously you have to look at different commodities and countries specifically, and going back to, for instance, for copper, I think one of the key changes that happened with COVID-19 is obviously the huge price spike that we saw in copper that is coming online with the idea of this new greener economy, and actually COVID-19 and all the fiscal stimulus that we have seen in Asia, Europe, now North America are pushing towards moving faster into a greener economy, which would mean more copper. So there's a huge, great story about copper. Now the issue is that, okay, where is that copper will come from? And that's where we'll have to see the differences. So for instance, Chile, most of the expected Capex or new projects coming from brownfields. So you'll have to analyze those differently to compare, let's say, with Peru, which is going to be mostly potentially greenfield. And then when you look at new mining jurisdictions, such as for copper at least, such as Colombia or Argentina or Ecuador as well, it's a completely different field in terms of potential Capex expenditure and the type of projects. So I think a lot of changes are happening, and then all of those ESG considerations and this green economy will put some pressure into the projects as well, because now, as Julio also mentioned, companies will have to be in line with these new ESG guidelines that basically the world and the society is claiming for. And that will include issues with water, tailings management, use of renewables, maybe switching to autonomous trucks and also electric trucks, and all of that will add potentially some more Capex intensity. So those things will probably shift how new projects will shape. And also, I think I'm taking too much time, but the last comment I will make as well is that you mentioned a lot about sustaining Capex and maybe the difference as well. Usually the difference we see is between brownfield projects and greenfield projects.
Right.
Usually we'll tend to think that brownfield projects are less risky, less intensive, and so on, because obviously they have already existing infrastructure and so that. But I think a key difference also we're seeing now, particularly in Chile, is that brownfield projects are actually more about transformational projects. So it's not just a bit of an increase in production or a new phase in the mine, is switching completely to underground block caving or switching dramatically the type of processing or the mining method. So having said that, brownfield projects are going to start being more and more tricky, and then we'll have to see, particularly with the huge block caves, if they will actually be able to deliver the production that they forecasted initially. So yeah, so some general thoughts. Maybe I went a little bit all over the place, but
no, we have time. You know, before we just continue on with these same themes, considering the changes in not only the workforce and the ways that workforce is managed that have occurred with the pandemic, and also these new demands that are being placed on companies that each of you mentioned in terms of ESG. How, you know, how are companies prepared to deal with those? I mean, are these factors going to be issues that will impact the way investment takes place? Are companies prepared to deal with it, or are these going to be really big challenges, like in the short term here?
If I may, Laura, then let me try to say what AngloGold Ashanti is experiencing in that topic. We don't see ESG as something how mining needs to be done. What we are seeing ESG, it's in the middle of the way we are as a company, and we identify ourselves as a company. And by saying that, we're putting as an example our Quebradona project, our copper project in Colombia. It's a project that is completely designed around ESG. And then we said, okay, now that we understand which is our purpose, now we're going to design the mine. So the purpose and ESG is in the middle. An example that we can show the world on how we can materialize what we are saying is that we said with the community, we're going to make the mine in the middle of a park, of a biodynamic park, which is going to be the closure of the mine, but it's not going to be done at the end of the life of mine. It's going to start being built, the park, exactly the same day that the mine is going to be built. So we have a mine in the middle of a park, both being built at the same time. And the way that we are designing all our production is using electricity at most. So it's a very clean production. And that electricity comes mainly from hydropower, so clean as well. We're putting a circular economy concepts in the middle of the disposal of the tailings facility. So we've been co-designing with a cement company and with the universities and with different entities how we can use the tailings, the filter tails, how can they be used to make a cement soil material to make roads, tertiary roads. We're also seeing the possibility of the waste. We have very few waste, but how can we use the waste to produce something that is not waste itself? So we're thinking on paper, rock paper, and all that concept on how the mine is going to play a different role in the world of mining was done since the beginning. We hired something that normally the companies don't hire a lot, that is architects, because we want our mine to be not only well designed and that operates correctly, we want it to be beautiful for the environment, for the landscaping. So those are many examples that I see that are what Quebradona is doing. And I personally believe that that's the way all the projects are going to be looking in the future. Everyone is going to have its own style, but you'll see that ESG again is not going to be like, by the way, let's do this. ESG has to be in the center of our business.
And what can we say then about, because I'm not saying it's easy, but I think when you're talking about a greenfield project that is just now starting to be designed and you can get into that mindset ahead of time and you're going to have a beautiful result, how prepared are companies to deal with applying that mindset at the center of the operation at existing operations? I don't know if Felipe, you can talk to us about your experience at other AngloGold Mines, or perhaps Francisco or Julio has kind of
I
seen
can quickly answer,
that
and I'll
challenge.
give Francisco and Julio so they can build on that. I think it all depends on the life of mine of what you're talking. If you have maybe 4 or 5 years of life of mine, it's going to be very difficult to make an important transformation. But
Okay.
what is important is to have a very honest discussion on mine closure, on how that mine needs to be closed and the community needs to be in the center of that decision. If you have a longer life of mine, or you're planning to have a second phase, or you're having extensions, then that's the opportunity to start making that transformation.
Okay.
Yes, just to add to that, I think to re-emphasize what Felipe just mentioned about closure, I think that's a key aspect that maybe many times is disregarded. But obviously, anything related to closure mines, it will have to be transformational in the sense that it's going to be more and more relevant. Obviously, that will put pressure in the capex expenditure of that will actually mean for a company to do the closure and all the remediation of the site, and maybe that would even push to make sense to even expand the life of mine further and further. So usually that happens when every time you're closer to the life of mine, to the end of the life of mine, you usually extend it for another 5-10 years and so on. And then you have other huge operations, mega operations that have, I don't know, 50 to 100 years of life of mine. But I think what we're starting to see is getting to the closures. I think we'll start to see how mine operation will try to expand the life of mine as much as possible, and that will be the timing to make everything compliant with the ESG's requirements at the moment. Now, one last another, maybe taking it from a different angle, like more with the cold head and thinking more in the financing and numbers. I think ESG also will have an impact in financing for projects. So we're starting to see more and more now that beyond the, let's say, the social license to operate objective, which is obviously it's very important and core for many mining companies, as Felipe was saying. We're starting to see now that we're looking at hard metrics like CO2 emissions and that type of metrics will have an impact in the cost of capital of projects. We're starting to see that now from financial institutions that have pledged to only invest in, let's say, ESG compliant assets. Now, what it means to be ESG compliant, I think, is the next challenge, to really try to have a common understanding what that means. But at least we are looking at we are seeing a lot of work being done around emissions, I think, which is something more palpable to measure. And definitely the cost of capital will have an impact, and potentially the valuation of projects will depend on those type of metrics. So I think it's getting more and more importance in the actual financials of companies, and also as potential new regulations such as a carbon pricing can be in place, that will mean an increase in cost for some operations if they have a fossil fuel intensive, matrix for power. And then eventually, even more in the future, people are starting talking about the green copper, for instance, or green commodities, and how maybe there will be a differentiator price. We're not there yet, but definitely it's one of the trends we're seeing.
Yeah.
And just a final comment on what Felipe and Francisco are saying. Of course, businesses are related to economical decisions. Energy costs, and especially now renewables, are cheaper now and will be coming down for the next 10 years. Copper price right now is in the range of 4.5, actually it's 4.49 today. Last year average was 2.8. So I'm not saying that it's a huge jump. And there is some analysts that are talking that is coming a number that is between $5 and $6 per pound. So at the end, we are taking assets that the grades were very low, but there is some ripios, some dumps materials over there. So I think that most of these decisions are economicals. ESG means requirements. If you go back 10 or 20 years ago, closure requirements were minimal. So all of that at the end, if you add more costs or you take in consideration other things, with these commodity prices, and it's not just copper, it's same with silver, gold in the last few months. So there is a lot of investment and should be very positive in general terms. So again, adding to the comments that Francisco and Felipe just did.
Perfect. And as you mentioned, yes, prices are incredibly high at the moment. And as Francisco mentioned earlier, that growth or that trend in capital expenditure tends to follow, or maybe lags a little bit, but follows the price movements. So if we look at copper, at least to start out, the forecast now is for a big market deficit in a few years, and that's kind of been the forecast for the last few years, that in a few years there would be a big market deficit and that it will grow. If we look at the projects that we have in the pipeline, Latin America already plays a huge role. 42%, I think you said, Francisco, is the Capex in copper, or Latin America gets that percentage of the copper Capex. Could Latin America be in a position to play an even more important role in the supply side in the next decade? Maybe Felipe can tell us about, Quebradona and beyond, what we might see in Colombia. And also, Francisco, according to your analysis of the pipeline, because you get this big deficit and it seems very exciting, like copper prices are going to just jump through the roof in 4 years, but that pipeline is there to fill the deficit as well. So considering, the current prices, how much confidence is there in the current prices, and what, how advanced or not the project pipeline is? Where is that deficit really going to be in 4 years from now?
No, absolutely. So to go in that, let's say in the numbers, so usually CRU tends to be very not very bullish or very crazy about what we forecast, but no, having said that, you're absolutely right. So copper, again, we're talking copper, so the EVs and renewables is going to be what will drive growth in copper demand in the next years. But we'll start to see that from 2025 to 2030 onwards. But still, it's going to be the core of the growth of new copper consumption will come from those trends. Having said that, the deficit that we expect by 2030 should be around 4.75 million tons of copper. That takes into consideration the deficit, assuming the existing operations plus firm projects. So we account for some firm projects that are already being built or already are financed. So that will give us around a 5 million ton deficit on 2030. And by 2035, that will be around 8 to 9 million tons. So obviously we'll have a bigger increase there. And obviously the sort of the risk is going up. So in a potential greener scenario that we're starting to see with, for instance, what would happen in the United States with the new plan to boost the economy, and actually that will potentially have even a greater impact in EVs penetration of renewables. Maybe that will even increase. So we see that, but at the same time, in terms of projects, in terms of price, we are seeing that in the next couple of years, there will be quite a few increases in capacity in production. So around 3% year by year on 2021, 2022, and 2023 in terms of global copper mine production. This is due to new projects coming online, so such as Spence expansion or QB2, Quellaveco that you mentioned, and other projects elsewhere in the world. So we're confident that there is enough production coming online in the next couple of years, which will mean that copper price, according to our forecast at least, is going to have a little correction by the end of the year. But then again, as we started to see this new deficit, copper prices should start constantly going up from 2025 onwards. So a good forecast for copper prices. And in terms of projects, I think there are challenges, as we already have discussed here. So in the case of Chile, most of projects are coming from brownfield expansions, and then Chile will need greenfield projects. Otherwise, then you start running out of potential new capacity. So that puts some challenges in what Julio was mentioned beforehand in terms of exploration, how many greenfield projects we have here. And then that opens the opportunity for newer jurisdictions, such as Argentina, Ecuador, Colombia, that maybe are still untapped potential and could have an opportunity there to have maybe a greenfield project that can fill that gap. But I think overall that's sort of the view, and I think maybe we can discuss later also in how the political landscape might shape and make some difference in what will happen here. But the opportunities there, I think we're very optimistic in copper demand. However, it's a global competition, and whoever gets there first will have a first mover advantage.
Indeed.
Yeah, I completely agree with what Francisco is saying, and I'm taking all his analysis as the correct analysis, and I'm just trying to put it with two different things. One attached with the first comment I said on how important is the jurisdiction and its regulation in the pandemic war, post-pandemic war for attracting investment. So that's a very important point. And the other is understanding that copper projects normally are big and expensive, different than gold one. That gold projects that normally can be smaller and with less capex. So that's where I see that the established jurisdictions as Chile and Peru have an advantage at this stage because they're proven jurisdictions. We still need to see what's going to happen in Peru with the presidential elections. But at this stage, I believe from a jurisdictional point, the advantage is with those two countries, Argentina, Colombia, Ecuador. They need to prove themselves. Ecuador is starting to do it in gold, Fruta del Norte, even Panama is doing it well with Cobre Panama. Colombia, in the case of Colombia, we are a country with metals and minerals. We're not yet a mining jurisdiction. And I think Colombia needs to prove itself that it can attract a major capital for big projects and attract the big players. Colombia has a fantastic geology that has not been explored in many of its regions because of our violence history that has been corrected in the last decades. But at this moment, we don't have the preferred regulation to attract massively the big players with these big investments. So good geology, regulation needs to improve. In Argentina, I think that we have a good geology, not as good maybe as the Colombian one, more explored. It's a better jurisdiction, at least from how the players see it, because they know how to play in Argentina, with a problem in its macroeconomics. The big problem in Argentina at this stage is that its macroeconomics is not allowing US dollars to flow out of the country. So Argentina wants to attract the investment, but they are not able at this stage to guarantee that the profits and the dividends, you can take them back to your matrix, to your corporate office. And of course, that's not good for any kind of investment. So bottom line, I believe that you have the new countries trying to make new regulation that attracts the new players. The old countries or the most well-known countries trying to improve and not let the new jurisdictions to take that piece of the investment that is going to come post-pandemic.
Just to give some context, and because some numbers maybe sometimes don't provide a clear picture, 5 million tons that Francisco just mentioned for 2030 is another Chile. We produce 5 million tons. So in the next 10 years, we need another Chile. And, you know, for any project investment in mining, it takes between 3 to 5 years just pre-investments. As Felipe just mentioned, you know, you need to do the study, metallurgical test work, drilling, sampling. So it takes several years. And then execution takes another 3 to 5 years, depending on the size of the monster. So any project of mining will take between 5 to 7 years easy. So if Francisco is talking that we have a gap of another Chile in 10 years time, those investments should start in the next couple of years. So, and that assumption is related with renewables, all the forecasts that we do right now. So quality of the ores are not getting better. All the requirements are not getting easier. So that's why it's important to have this in context, Laura, before we move to the carbon footprint and all of the other topics that are important too.
May I add a little comment? And to that, Julio, and to add, you were talking about all the metallurgical work, feasibility studies, etc. that you need. A key aspect as well is permitting. That I think when we talk about the political issues, we have sort of discussed that. It's easy to start a discussion around macro topics like the elections and so social political instability, but then something very pragmatic is about the actual processes that country can have in place for permitting and how that's being an issue in Peru, particularly for anything related to exploration. In Chile also for to get all the environmental approvals. I think we're still behind in terms of having a clear framework that will allow to mining companies and investors to know the timing on when something could or could not be approved. Because I think what is relevant for mining companies, it's not always saying, hey, we want our project to be approved 100%. It's not that, it's about the timing. So is it going to take 5 years to wait for the approval, or maybe 7 or 10? We need to know in advance so we can plan ahead. So I think that's another key piece that is some countries in South America has been falling behind in terms of security and clarity about a framework for permitting.
Yeah. And particularly looking at the next couple of years, I wanted to look a little bit at two topics. One is precisely this political landscape that was mentioned and that we all know is going to shape where investment ends up going, independent of the metal prices, and also community issues. So maybe if we start just looking a little bit at that political landscape, we've got in Chile, this latent political or social political crisis, which has not been resolved yet, and votes coming up as well as the presidential elections. Peru, there's some pretty big uncertainty ahead of the runoff vote in June, these being the two biggest copper jurisdictions. What do you guys see happening in those two countries for this year? Are these issues that are going to maybe slow down investment, or maybe already have impacted that Capex guidance for this year, or are companies more or less comfortable with what's going on?
If I may, let me start.
Please.
Oh, Francisco, please, after you.
No, go ahead, Felipe.
Thank you. I'm going to try to divide communities and the political landscape and then join them back. The first thing is, again, if you see the pandemic, what happened with the pandemic is that communities understood the important role of the mining companies. Mining companies that kept hiring, kept paying salaries, that kept moving the economy even in the worst moment than the globe has seen maybe after World War II. So communities understand the importance, and on that year I saw a different scenario where politicians were not able to move a lot those communities and how the communities think and live. They were like more independent. And when you see politics, normally politics, they try to use the community as their advantage, especially in the electoral moments. But now, with the countries having a big and important debt that was acquired during the pandemic times, countries need to pay it, and they understand the importance of mines, and especially of new mines, of new investments. So I personally believe that we're going to start to see a better landscape for communities and for a political approval of the activity. And that can only be materialized if in these years, all of the companies understand what we started talking about ESG. I think we have a big opportunity that we had not seen in many years of showing the world that we can do mining with purpose, and mining can be completely different. And that's why I see that we won't see a lot of attacks in the presidential elections that we're seeing to the mining activity. And I think most of the politicians are being more cautious on understanding the importance of this activity for reconstructing the post-pandemic world in our region.
Well, I would like to share your enthusiasm, Felipe, your optimism. But no, I think, yeah, I think you should be blind to really not see what the impact that mining has had in many of the South American countries, namely Chile, Peru, and others, and the benefit that has come from that in terms of economic development and social development in the last decades. I think Chile and Peru in the regions were sort of they sort of changed the way they decided to attract capital in late 90s and early 2000s. And I think they were very successful in building an infrastructure, not infrastructure, but an ecosystem that allowed for a mining investment to move forward. And obviously that's taken to the place they are right now. However, given the situations we have so far right now, I think COVID-19, the crisis exacerbated the, let's say, imperfections of the different countries, particularly a lot of social distress and so on, and the economic impact of the crisis is heading pretty bad. We're still looking at a lot of cases in the region. Lockdowns are continuing to be there, so that have a huge economic impact in the region. And now the easiest way for, let's say, populist type of politicians or parties or views is to try to take advantage of this and I don't know, in simple words, promise the heaven by doing a lot of obviously taking a lot of promises in terms of social benefits and so on, and that and usually mining is sort of an easy target in saying, hey, we need to tax them more, or mining's taking everything, or we need to take everything and run by the state. So in Peru, for instance, that's a sort of a huge speech now in terms of part of the presidential, part of the actual plan that there is in Peru, in Castillo's agenda, is to nationalize key sectors such as mining. So obviously, if that actually will come to fruition or not, obviously, at least I think institutions still work in Peru and Chile. In particular, in Peru, the parliament is very divided. So obviously, you'll have to have some consensus there. So it won't be that easy to do that. But there is a lot of discussion about that. So I think now what mining should do is to really emphasize there, and what Felipe was saying, and show to the society and the different stakeholders the relevance of mining in the economy, and how we can lose competitiveness so easily. So as the tax discussion continues in Chile in terms of the royalty, for instance, it's very obvious that new investments will freeze or will wait, and companies will be in a wait and see mode, because you can't evaluate a project if you don't know what will be the tax regime, right? So you have to wait that. So how long are you going to wait? 1 year, 2 years, 3 years? Similarly in Peru, is actually going to be a nationalization of mining industry? Maybe yes, maybe no. Okay, let's wait and see. So those couple of years can have a huge impact, and then you can have other countries and advancing projects elsewhere. And yeah, and I think I'm taking too long, so maybe I'll give it to the other panelists to go over this topic. But I think it's challenging. It shouldn't be seen very lightly, and I think hopefully everybody comes to their senses.
Yeah, and also giving some data, 30-40% of the capex of any project goes directly to the local community, to the country. first, 30-40%, because the rest is supplies, and other activities. Then 10-50% of any capex usually go to the local community, local district. So that means a lot of work. That means people, that provides transportation, accommodation, meals for the people that is related to the projects. One specific example, and I know that we will be closing shortly, is Dominga project in the north of Chile. This is 500 kilometers north of Santiago, roughly, 2.5 billion investment. There has been some, as Francisco mentioned, the permits, they were struggling, so it's on hold, ready to start the construction now, but on hold. So from those 2.5 billions, they already spent 300 millions just on pre-investment. So they're expecting 30,000 employments during the construction. So actually, the local people in that area was claiming, and I have the quote here, that they will provide hope and better life quality for our families. This is the people that is close to the mine locations, close to the mine assets. In that particular region, Coquimbo had in the last year 13% of unemployment. So, in this particular case, and this is public information, the project is also willing to share the water. They are bringing seawater, they're processing that, and they will provide that potable water to the communities nearby. So there is a lot of benefits, as we are talking, are on hold. Unemployment has been an issue also during the pandemic. So we need to be very specific about, the physical things, These 30,000 employments that are pending in this particular project, 10-50% that it goes directly to the communities. So that benefit, in particular after the pandemic, is quite important. So I think that, and of course, we need to be very positive, and those are the kind of things that we're pushing, but we should be receiving a lot of investment in this region.
Well, let's hope so. I think as each of you has mentioned it, there are big, important benefits, economic, social. Obviously, everyone's looking to do everything responsibly. And I'm really personally looking forward to seeing that transformation toward that ESG mindset. It'll be interesting to watch how Quebradona unfolds and many other projects in the region. Unfortunately, our time is up. So I just wanted to thank each of you. It was very interesting and enjoyable to have this panel this morning. And I will just turn it back over to Cesar to go ahead and close out today's webinar. Thanks, guys.
Thank you very much. Thank you all, Laura, Francisco, Julio, and Felipe. It's been an awesome panel. We had at the end of the session a lot of questions, so I will try to manage them and see how we can answer the ones that were not answered during the session. And just to close off, I just wanted to say that BNamericas will continue to hosting these webinars this year. So stay tuned for more information on the next ones. If you're not a BNamericas subscriber but want to know more about us and what we do, please visit BNamericas.com. Thank you very much. Have a nice day.
Clients change, businesses change. The world is transforming faster than ever, and the opportunities are there, waiting for us. Over 20 years of digital innovation have turned us into the leading business intelligence provider in Latin America. BNamericas has a database with thousands of industrial projects, company profiles, key contacts, news, reports, and data, all in one easy-to-use platform. Every day, more than 50 on-the-ground journalists and experts analyze the region's major industries. Explore projects that feature opportunities for your business. Find the companies participating in those projects and connect with their decision makers. Make the best business decisions with all the facts and insights you need about the industries that are driving the Latin American economy. Get timely reports with the latest news about projects, regulations, and investments. Stay on top of the business trends. Find out what the risks and opportunities are for your business by reading the reports and analysis of our on-the-ground experts throughout Latin America. Redefine your business strategy and choose the path to success. BNamericas, connecting opportunities.